economic data of any consequence to bring you in today's trading session, but we are once again delighted to be joined by Todd Crosland. Todd, founder and CEO of Interbank FX. Todd, thanks very much for being with us once again.
Thank you, Bob.
And of course, Nick Hastings from the Dow Jones Newswire. So, you know, Todd, the dollar's been trading at record lows versus both the euro and the pound sterling. Is anything going to break us out of this pattern of persistent weakness?
Well, right now, I think the only bright spot for the economy in the U.S. Right now is the employment situation. That appears to be continuing to be somewhat strong. And I think that's the only thing that's helping the dollar. But when you look at the fundamentals of the underlying economic viability of each country, we have a much higher growth rate right now in the European Union and Great Britain, as we saw the GDP numbers come out with Great Britain last night. All of these numbers has put weakness on the dollar, especially with the backdrop of Fed Chairman Bernanke's testimony this week, basically restating and giving new guidance on the health of the economy. So now he's predicting a 2.25 to 2.5 growth rate for the U.S. economy this year, which is lower than most of Europe, European Union, and other countries in the world as well. So I think the combination of the lower forecast for GDP growth in the United States, coupled with the higher growth rate, particularly in Europe, and then you look at the interest rate differential, I think that there's continued weakness in the forecast for the dollar right now.
And versus the dollar-yen trade has been kind of locked at a very tight range over the last several weeks. Is anything going to break up that dynamic?
You know, right now, I think we're going to be still stuck in that mode where there's such a significant interest rate differential between, the Fed's fund rate, the European Union equivalent rate, and then, this 0.5% interest rate charged by the Bank of Japan. There's just more appetite for this continued investment to sell the yen and buy the higher yielding currencies. And as Japan has been unwilling to raise their rates at this time, I think that differential is going to remain in place, where there'll be continued pressure on the yen. We saw the great explosive quarter that China posted again yesterday. They've raised their rates again today, and so that's put a little pressure on the yen as well. And so I think overall, I think the picture still is weak for the yen as long as this interest rate differential stays in place.
Got it. Let's bring in Nick Hastings here. Nick.
Hi, Todd. How does the price of crude oil, or I should say the increase in the price of crude oil, fit into this whole picture? I mean, generally, the market tends to say, okay, fine, for the dollar, crude oil rises are bad news because the Fed's going to worry about growth. In Europe, the Eurozone, the ECB is going to worry about inflation. And, well, in Japan, it generally should be seen as bad news as well. I mean, is this something you agree with? How is this going to play into this? Assuming, of course, that we continue to see the price of crude rallying up to new record highs.
Sure. Well, I think, obviously, as the value of the crude increases, that puts inflation pressures on all the countries of the world. And so we look at the core inflation rate in the United States minus oil. That's somewhat contained. But when you factor in the rise of oil and the impact that will have on inflationary pressures in the United States, that's a concern as well.
Yeah, well, I mean, the other thing I guess that's the market's obviously scratching its head over is China and its decision to raise interest rates by 27 basis points earlier today. Totally expected. The market had been anticipating it for several days now. So therefore, there wasn't very much reaction, Todd. But going forward from here, I mean, the market does seem to be relatively relaxed about China for the time being. But do you think this is going to once again become a serious problem, especially seeing that the government in Beijing really just doesn't seem to be capable of reining that economic growth that it's seeing back in?
Well, I think we'll see, as we continue to see these double-digit annual growth rates in China, I think we're going to have continued pressure on the central banks in China to continue to raise rates to quell that inflationary pressure. And I think that's overall good for the market. They're just going to have to continue to raise rates to quell the expansion that they're seeing and the inflationary pressures that they're seeing.
Todd, meanwhile, the Eurozone, has been trying to seek some political redress for the strength that we've seen in the euro. Is that initiative just sort of doomed, or are politicians just kind of airing some grievances without doing anything substantive?
Well, I think they can talk about it, and it's obviously a concern because it impacts their exports, indeed. But I think the underlying factor is, you look at the GDP rate for the United States versus everyone in the European Union. It's going to be, there's still this differential where they have a bias to raise rates, and now there's a bias, perhaps in the first quarter of 2008, that the Fed actually cuts rates in the United States. So if Great Britain and the European Union, if they raise rates another quarter basis point by the end of the year, and the incentive and the bias with the Fed right now is a potential rate cut at the beginning of next year, that interest rate differential is going to put continued pressure on the dollar.
Got it. Well, we've been talking this morning with Todd Crosland. Todd, founder and CEO of Interbank FX, joining us this morning. Todd, thanks very much. Always a pleasure to get your perspective on the market. And our thanks, as ever, to Nick Hastings from the Dow Jones Newswire. So.